Thank you.
All
Okay,
right,
so
thank you
we're
very much.
just going to move straight into it. At your AAA, basically, it is called advanced audit because this is not the stage where you go into the exam hall and you're expecting what is questions. Your questions will most likely come in paragraphs, in essays, and you are being asked to use that paragraph that has been given to you, that case scenario that has been given to you, to apply your chapters to it. So I would say that prepare your mind for more of real life scenario questions as against what is questions in general. So because our time is fast spent, I'll just move straight into it. So I think chapter 3 today, which says rules of professional conduct. Now, what are rules of professional conduct? What are basically code of ethics in general? They are just the outlined regulations that govern people in a constituted environment. So when you hear the rules, when you hear the norms, when you hear, do you understand, codes of conduct, what it just means is that they are saying that if these people are called by my name, that's the scripture. But basically, if these people they have a particular similarity, this thing is going to govern them. And that's basically what our code of ethics. Now, for ICANN, as auditors, the code of ethics is being dictated by ICANN. So there's a document that says code of conduct for members that has been put together by ICANN that governs the activities or governs the actions of chartered accountants in Nigeria. Now, the document addresses some things. What it addresses is independence, objectivity, integrity, conformity with technical standards, and confidentiality. The acronym for this is COPI, C-O-P-I. So C is confidentiality, the second C is conformity with technical standards. Okay, so this conformity with technical standard can also be P, which is professional competence, right? O is objectivity, I is independence, and the second I is integrity. So these are the 5 code of ethics that have been stipulated by ICANN that's governing how every chartered accountant is expected to behave. Now, we have that in addition to the pronouncements by ICANN, there are some stated pronouncements by the IAASB. The IAASB is the board responsible for putting in place your standards, right? All the IASs that you know, International Standards on Accounting, is the IAASB board that is responsible for enacting all those standards. So the IASB also has the right to make pronouncements on accountants. Now, we'll now be taking these 5 code of ethics and we'll basically be breaking them down. Okay? Hope we're still together, everyone. Sorry, hope we're still together. Okay.
Yes.
Now, the first one we'll talk about is independence. What is independence? And this is even something that you would have done in your FR before. You understand? So it's not like a totally new topic. It is just the light that in which they will ask it in your professional that is different. Now, what is independence? Independence just means being able to have a mind of your own, right? Not being an accountant that is being tossed to the side. Oh, please do well to mute if your mic is. So independence is basically being able to have a mind of your own. Now, in ICANN, we know that independence is divided into 2. We have independence of mind and we have independence of appearance. What's independence of mind? It's the state of mind that permits provision of an opinion without being affected or influenced by another person. So it is the state of mind where your opinion cannot be influenced by others. That is independence of mind. You understand? Where as an individual, you have the luxury of making decisions without feeling like, this person, I cannot make this decision because this person has already given me 1 million before. I cannot come to the organization and not be smiling because I've already claimed to have a form of relationship with these people inside. You understand? Independence of mind. It is only you that is knowing what is on your mind. The second thing is independence of appearance. All this plenty information. It is just a state where you as a professional do not act in a way that makes another third party believe that you are not independent enough. Are you with me? So if I'm in this class now, and let me take somebody's name, and I come to the class, and at the end of the class, I don't convince Lolade that I don't know if Lolade is a girl or a guy, but I don't convince Lolade that she can listen to me and be able to pass a exam. That is lack of independence of appearance, because it is my actions and inactions that put Lolade at that state where she's able to say that, oh, I believe that this person, if it's this person that told you that it's morning already, then it is really morning. You understand? It is my actions that tell a third party how they can rely on the things that I say or the things that I do. Everybody with me? Yes. Hello, everybody with me?
Yes.
Yeah.
Now let's move on. What's the ICANN rules on independence? Number one is that all members are to discharge their duty with integrity and objectivity. A member should not allow his name to be associated with a document, report, or financial statement that is misleading or biased. What's objectivity? Objectivity means without bias. It just means that if I'm giving a feedback to Dangote, and maybe their FS, something is wrong with it. If that same problem is happening to a small base company, I should not give that opinion harshly, because when I'm giving it to Dangote, I'm trying to be on their good side. But because this client is a small client, I believe that anything I say to them, they will take it like that. And then that is why I choose to talk to them anyhow. Objectivity simply means without bias. Now, another thing is that as a member, you know that this report, you are not sure of the information that has been put there. You cannot verify the quality of the information in that FS. You should not make sure that your name is not on that report. Are you with me? Now, the second thing we have that the auditor should not hold beneficial interest in the equity of a client's company. An auditor that is going to audit a firm cannot be part of the shareholders, like major shareholders in that firm. If you even work with the big funds, they have like this I think they call it like a week's form that they fill before everybody gets on an engagement that solidly clarifies that, okay, I have no interaction with these clients. I don't do them on a personal level and all of that. Number two, as auditors, we should not accept fee which is dependent on the sort of the assignments. Our work is not, okay, if our shareholders really like it, so yeah, we'll give you 500 million. No. Before the beginning of the work, you will collect your charge. You understand? Regardless of whatever that information will be used for, you will have decided how much you want to collect, and that is what you have to stick to. Okay, next one, we have that he should not act for two opposing clients. Okay, he should not act in executive capacity. You cannot be an auditor for a client and also be on the client's payroll. You are part of the management team, or you are collecting monthly salary from a client and you are still auditing them. It's totally breached the concept of independence, because you obviously don't have a mind of your own if you are part of the management of your firm. Okay, then we have that he should not ask for two opposing clients in the course of negotiation or settlement. You can see that a client, even in Nigeria, companies that are obviously competitors, they would not recruit the same auditor. Yes. And that's because they're trying to protect the integrity of that audit firm. Or if the audit firm is even large enough, they can actually take auditors and make sure that the two teams do not collide. Like nobody that is in this team is also repeating in the other team. You understand? Also, we have that he must not give or receive from the client's company a loan or financial guarantee unless the client is acting in the ordinary course of business and the term does not unduly favor the auditor. Was making this joke that imagine that the person that wants to go and audit all those small loan apps, your name is there. Your name is there as people that are owing them. Do you think you'll be able to express your opinion without any influence? No. So they tell that if it is not the ordinary course of business of that client, and one of the justifications when we're talking about it in class was that no, if it's actually a loan app, somebody that was practicing as an auditor was telling me that no, if it's actually a loan app, a auditor can have loan there because that is the ordinary course of business of that client. Just that you cannot be an auditor that has a loan from a manufacturing company. Are you with me? That you are going to audit, because the work of a manufacturing company or the service of a manufacturing company normally does not entail them giving out loans. Do you get? Hope I still have a class with me. Hello?
Yes, ma'am. Yeah,
I
we're
still
with you.
have class, right? Okay. Thank you. Then he said he must not act as an auditor for a company where he's acting as a receiver. A receiver is when a company is liquidating, like this kind of Heritage Bank now. So they would sell off their assets, things like that. So for people that have maybe their creditors or people that have deposits in their bank that is higher than that have deposits in their bank that is higher than what NDIC will cover, which is 5 million, right? They would get their money through the proceeds of this sale, and it is being done by a receiver. So if you are a receiver for a company, you cannot be their auditor again. Do you get? Other things we have that the auditor should not derive great proportion of his recurrent fees from a client. 25% is considered substantial. Now let's do the math. Let's say, for example, all your amount that you earn as an audit firm in a year is 100 million. One client cannot be giving you 25 million or above 25 million. Who can tell me why? Who can tell me why? Why one client cannot be giving you more than 25 million for what we just read? Please, our time is fast spent. I'll appreciate if the response comes on time. Why did we say that you cannot get more than 25 million if your total amount that you make as revenue is 100 million? Why can't you get more than 25 million from one client? Should I be calling names? I know that you people know this thing, but we just have to justify our conscience. I know we're teaching it. Zainab, do you want to tell us why? Zainab, do you want to tell us why?
For
Oh,
me,
Deborah.
right? Okay, let me just try. So for me, right, why he should not accept 25 million? Because if 25 million is 25% of
Yeah,
100 million, which is 1/4.
yeah.
So this will affect, I think, to me, this will affect his independent judgment also.
Yes, very correct, very correct. It's just like as if you know that, okay, there's one stable 25 million naira that's coming and my total revenue, thank you very much, and my total revenue is 100 million. Definitely, you will not want to jeopardize that, Abi. And that is when your clients will not be telling you that, this will not happen. It's not that we're like that. It's not that, you understand. Before you know, you're already compromising on what your standard should be. Thank you. Then we have personal relationship, either by blood, marriage may also affect independence. You are going to go and audit and you're the audit partner and your wife is the CFO of that organization. You guys should not be playing. Abi, don't be using our finances to be doing love play, obviously. Then we have acceptance of goods and service or an undue hospitality from a client can also affect independence. If you saw the physical class, I like to stretch this because I was telling somebody that I was saying it in the class that what people consider as undue hospitality is very different. Like Mr. Elvis now, maybe if somebody gives him I don't know if he's in this class. Mr. Elvis, if they give you 2 million for lunch, is that undue? Is that undue hospitality or you think is normal?
That's undue.
Okay, that's undue. But if I should
For
ask another
lunch.
person, in this class, maybe Deborah, some people who are very bougie, like somebody like me now, it may not be undue. What do I want to ask? Robin NBC. I don't know if you can use your actual name, but who wants to tell me that 2 million here is not undue? It's just normal thing. The person can just be kind. The company can just be kind. Who wants to say that 2 million? Who is on my side that will say that 2 million is not undue? It's just normal. Who
I'm not
wants
on
to
your
agree?
side. I'm not on your
Yeah,
side, no.
you're not on my side. Ah, wow, wow. So nobody, all of you here, you're prudent accountants or you're prudent actual accountants. Wow. So I'm really alone
Consider
in this world.
materiality.
But okay, oh, you see my brethren. My brethren. You consider materiality. So if that company now has 50 billion or their worth is over 100 billion, if they give you 2 million, it's not sin B. It's still undue, right? I'm with you. I'm with you. You have a point. So, it's just a very funny concept because one of the major problems we have in accounting basically is that it's a social science. So the fact that there's still an interference of human being decision, right, in it makes it quite difficult. There are big fours that if you are taking them to hotel, they only take some world class, like they only take standard world hotels that maybe a night can pass for 200,000, 150,000. Are you with me? But there are still some other firms that if you should consult their services and you want to take them to hotel and you are going to go and put them in 200K hotel. In that context, it is undue hospitality because that is not the value of the firm, or that is not the value that you as a company can provide. So I'm just trying to say that when it comes to acceptance of goods and service and the concept of undue hospitality, the concept of modesty has to come in. So it depends on what is modest towards that auditor. You understand? So it depends on what is modest towards that firm. Like now, if your client is abroad, then booking a flight for you to go there, right? To go to the actual company, maybe for citing, for collecting some evidences, is not undue. You understand? But imagine that your client is in Lagos here. They now say they want to book flights for you to go to Paris and just chill for 1 week. Is that modest? No, right? Because there's no reason why you are going on that trip. So that's the concept of independence. Now let's move on to the second concept, which is what? Objectivity. The principle of objectivity imposes an obligation on chartered accountants to be fair, intellectually honest, and free of conflicts of interest. Regardless of service or capacity, chartered accountants should protect the integrity of their professional service and maintain objectivity in their judgment. Now, the major essence of objectivity is actually for our reputation. You understand? The reason why accounting is one of the most notable professions, I tell somebody that one of the reasons why I feel like accounting is such a great career choice is that, that joke where they will say you can work anywhere. It is literal the only thing that I can see that you can actually do anywhere. Even a church needs an accountant, right? A mosque needs an accountant. So it is so vast that what keeps the profession is actually the reputation that comes from it. And that's what even separates you as a normal accountant and somebody coming to say, I am a chartered accountant. You understand? Because they want to believe that, okay, if a chartered accountant is expressing their opinion, it will come from a professional point of view as against their personal sentiments. And that is what objectivity is. Removing every element of bias in a decision making. Everybody with me? Sorry. Can you still see my screen?
Yes,
you can. Okay. Now, the next one we have is that in selecting the situations and practices, in selecting the situations and practices to be specifically dealt with in ethic requirements relating to objectivity, adequate consideration should be given to the following factors. So they are saying that what are all the things that are enshrined in the concept of objectivity? Now we have chartered accountants are exposed to situations which may involve the possibility of pressures being exerted on them. These pressures may impact their objectivity. So they're trying to say that this our job is a pressure work. Abi, clients want you to tell them that what they made is 30% profits, right? It takes you as an accountant knowing that you cannot be the one that will be telling me what I should do. You understand? And staying on that, your objectivity, standing on business. Next one, we have relationships should be avoided, which allow prejudice, bias, influences of others override objectivity. You understand? Like that's why we have things like do not audit a client more than 5 years. You understand? Because after 5 years, they want to believe that even if you are going to that organization, you are frowning. Imagine you are going somewhere every year for 5 years. No matter how unfriendly you are, once you have made at least one friend there, somebody will tell me that no now. No matter if you are going somewhere every year for 5 years, do you want to tell me that even if it's one person in that place, you will not have built a relationship with them? It's almost impossible. You understand? Now, we have the third one. Chartered accountants have an obligation to ensure that personnel engaged in professional services adhere to the principle of objectivity. So as you are also standing on your own business, you must make sure that maybe, for example, your partners or your team members are also standing on business, because when it comes to accounting, it is not only you that is involved. There are a lot of other parties that are involved in this decision that we're about to make. Okay, now we have chartered accountants should neither accept gifts or entertainment which might be reasonable to be believed to have significant or improper influence on their professional judgment with whom they deal. Say this thing is coming back again. They should not accept gifts which might be reasonably to be believed. You know what I told you, that the concept of hospitality, or what is modest, is very, very relative. You understand? So, but just make sure when you are collecting something that you know that is a problem, you can also detect it. You too, you know that this thing that I'm collecting will become a problem for me. Okay, now the third one we have is integrity. Now, what is integrity? It's very simple definition. Integrity does not just mean honesty. It means fair dealing and truthfulness. Now, the concept of integrity imposes an obligation on all chartered accountants to be straightforward and honest in all professional and business relationships. Integrity implies fair dealing and truthfulness. Now, what does fair dealing and truthfulness mean? Sometimes you can tell the truth, but it is not the whole truth. Are you with me? So integrity just means telling the truth, right? Honesty just means telling the truth. But sometimes you can tell the truth, but it's not the whole truth. And the way you tell the truth can be different for different people. So did you pass? Yes, I passed. But you have removed the fact that you passed because somebody told you an answer in the exam hall and maybe you didn't actually read. You have removed the fact that maybe you passed because you have a relationship with the lecturer. You have removed the fact that maybe you passed because the question that was asked was a direct repetition of what was asked last year, and that's the only thing you practiced. You understand? So sometimes when we tell truth, it is not the whole concept of that truth. But when it comes to integrity, we are saying that you must be honest, you must deal fairly with every individual involved, and you must be truthful to the latter. You understand? If you tell somebody something as an accountant, they should be able to believe that, they should be able to run with it. If you say this document is true and fair, everything about that FS should actually be true and fair. Do you get? Okay, now we have chartered accountants should not be associated with reports, returns, or communications or other information whether they believe that is false, that they believe that has been furnished recklessly. They've panibited, rebited, underbited that information to look the way it is, and information that omits or obscures information, that consciously takes out some particular information because they want the information to look a certain way. Don't be involved in those kind of things. Now, we said that threats can arise. Okay, now these are the things when we talk about integrity. They now introduce something and they said that in the course of carrying out your duty as an accountant, threats can arise. What are threats? Threats are situations that stop you from being able to put in place your code of ethics. Are you with me? These are threats. But when all these threats happens, as accountants, ICANN has provided some things that they call safeguards, you understand, to caution against these threats so that these things don't materialize. And we'll talk more about threats and safeguards as we move on in the chapter. Please, does anybody have any question to this point? Hello?
No.
Okay. Because this chapter is more like some sort of revision. I know that like a lot of things that I've said in these chapters are like repetitions or maybe something you have heard in your FR, in your CR, right? So, but just permit us because it is a bedrock of other things that we'll talk about in AAA, and that's why it's important for us to do it. Now, compliance with technical standards. This just means that as accountants, we don't act on our own regard, right? As accountants, we don't act like, you don't say, okay, maybe you get to a client site and you say, these clients, they're always very confident. If you ask them for something like, just provide the information. If you ask them for sample, they'll provide it. You cannot use that justification to say that, that means their FS will be correct. No. Everything we do as accountants is being governed by some standards. I told you about ICANN giving us our code of ethics. I told you about IAASB, which are the bodies that are responsible for enacting standards, also giving us pronouncements that helps us to act. So compliance with technical standards is saying that as you audit your client, there are some relevant standards that serve as a guide for what you are doing. And that's supposed to be the basis of your interaction with your client. That is supposed to be, last week you guys did the things that entails an assurance engagement, Abi, and one of them is a suitable criterion, right? What's a suitable criteria? The laws that help you to do your work. And these laws are basically our standards. You understand? So we have some organizations, we have IFAC, we have IOSCO, and even in Nigeria, we still have the Nigerian Standard on Auditing that helps us. So it just tells you that our profession is guided by technical standards. We don't act based on our own intuition, but what does the law say? That is what guides what we do as accountants. I will not spend too much time on that. Now, maintenance of technical competence. So I just want to say that as accountants, sometimes the laws can look very different from the situation you are in now, right? So the truth is that we need to stay up to date as modern accountants. We need to be able to look at a situation, analyze it, and be able to know how exactly we want to implement the standards on that particular scenario. Like now, let's say, for example, you're an accountant that your client is pressurizing to change figure, that kind of thing. You need to know the exact standard that stops you from carrying out that particular action, so that you can respond to the client and say, okay, this is the reason why I will not be able to do this for you. You understand? Responding directly with standards. So we have confidentiality. You can tell us what the concept of confidentiality means. When you say confidentiality as an auditor in this case, what does it mean? Hello, what does it mean? Somebody should answer now. I should be the only one talking. When we say confidentiality, what does it mean? Let me call somebody. Please, who is using O, just O, letter O? Hello? Who is using just letter O? Or does Mr.
I'm the one.
Okay, sorry, what's your name?
Lola
okay, somebody said she wants to try.
Yes.
Okay, so please, do you want to try? When you hear confidentiality in the context of a child accountants, what do you think it means?
Yes, confidentiality means that any of information that you have obtained in the process of your audit work should not be disclosed, or should not be used for personal purpose. That's to my understanding.
Very, very excellent. You have said it all. Sure, we should close. Everybody should be going home. But yes, what you said is, why are you people laughing? I said we should close now. With everything that you people have said in this class now, I don't think I really have much to do. But yes, what you said is very brilliant. It just means that you are an accountant. You will get the privilege or access to some informations because of the kind of role that you are. All of us we hold accounting roles, right? Right now where you are, you have your company payroll. As you're looking at this stuff that is buying new shoe, you're looking at that. You have privilege to some certain information that different people in the organization may not have access to. You understand? And even in the context of audits, you are seeing the whole company data, everything. Next thing you are seeing in the news that the CFO, you are saying, you're saying that the company daughter wants to marry and they are going to go and do destination where they are looking at that. Take a look at don't share a new company, you could not have money. They destination wedding. You are privileged to some certain information. But it does not mean that information now, you will now take it and be using it for, first of all, financial advantage or your personal advantage. You understand? Let's say, that, okay, they want to do this XYZ with their stock and you are now going to do insider dealing. Based on your information, you're now using another person's name to buy shares or that kind of thing. That would be wrong. So what you have said is very correct. Now, we said disclosing to persons outside the firm on a need-to-know basis about an organization, except there's a legal right. So we have some things that we call exemptions to confidentiality, but I'll just run through what it means when we say that confidentiality should be a thing for chartered accountants. So we said Using the financial information required as a result of professional and business relationship to your personal advantage. This is even the normal definition of confidentiality. Then we have chartered accountant should maintain confidentiality, even in chartered accountant should maintain confidentiality. Chartered accountant should maintain confidentiality even in social environment. I think when I was still doing class, the person that was teaching us audit was telling us that there are some reasons why auditors don't used to go out, they don't used to go to parties, they don't used to like to be in a lot of social environments. It's because you don't know the time that you will bear. You don't know when you want to start gisting your friend. Not start gisting your friend about one company, and that particular your friend has gone to tell the other friend. That your other friend has gone to say, before you know, the person that has shares in the company I've heard, let's imagine that the person is a major stakeholder and the person decided to pull out their shares based off of a grapevine. They now started to trace it, that where did you get this information from? And then it comes back to you. Imagine the kind of disrepute that it will put to you as a professional. So they say that auditors used to like to avoid social environments. So we as accountants now, do you think you like to avoid social environments? If you know that you're a chartered box, avoid social environments. But if you know that you can manage it, there's nothing wrong at all. Okay, we had a chartered accountant should be alert to the possibility of long association with a member. Like I said, you cannot be interacting with a client 5 years in and be telling me that you are independent. It is impossible. Now, we have a chartered accountant should also maintain confidentiality of information disclosed by a prospective client or employer. If somebody tells you something, the person should be able to trust you enough that information should not be outside by the next time they are seeing you. Next thing, we had a chartered accountant should consider the need to maintain confidentiality of information within the firm or organization. You understand? If something is wrong, before you go and start it outside, before you even go and start seeking an external sort of counsel, you're supposed to have that conversation first in-house and be sure that, okay, maybe nothing can be done about this thing, and that's why I'm taking the information outside. Also, we had that chartered accountant should consider the need to maintain confidentiality. I was repeating that. Chartered accountant should also take reasonable steps to ensure that the staffs under his control are also maintaining confidentiality. You see that all these things, they are intertwined. What we talk about in independence is almost what we talk about in objectivity. It's almost what we're talking about even in our confidentiality. So because it's a social science, because it's not only you that is going to audit that client, you need to also make sure that your team members also understand what is at risk and they are not going out of their own boundaries. Okay, we have the need to comply with the principle of confidentiality continues even after the end of the relationship between each other accountants and their client's company. This means that it's not like you say, end of engagement, oh yeah, it's for me to be running my mouth. This thing that we also have, that people that are together, they had a relationship before, the relationship broke out, and then you now start to tell everybody everything about the person. It speaks so much about your professionalism. Information should stay as informations while they are relevant. Okay, now we have the following circumstances where chartered accountants may be required to disclose confidential information. So there are some rare cases where a chartered accountant will be required to disclose some certain information about their clients, right? So somebody should read for us. I've been reading since. If you can see my screen, you can just read for us. Hello?
Okay. Hello?
Yeah. Okay, yes, you can read.
Okay. I should start from the first one, right?
Yes, you can start from the first one.
Okay, number 1, disclosure is permitted by law and or is authorized by the client or the employer. Number 2, disclosure is required by law. For example, a production of documents or other provisions of evidence in the course of legal proceeding, or B, disclosure to the appropriate public authorities of infringement of the law that came to light. And 3, there is professional duty or right to disclose when not prohibited. Then the next one, when not prohibited by law. That's number 3. A, to comply with. Okay.
Okay.
To comply with quality review of a member body or professional body. B,
Okay.
to respond to an inquiry or investigation by a member body or regulatory body.
Okay, thank you very much. So this is a very important question. These are the few, this is even the few questions that they still ask as what is. So they can expressly tell you that what are the exemptions to confidentiality? You know that confidentiality means that any information you have about the client, don't tell anybody. But there are some times that you have to tell somebody, Abi, to protect yourself, to protect that person, or there may be some cases. So what are now the cases? Just like you have read. Thank you very much. I think that's Deborah, right? Was that
Lolade.
Deborah?
No,
Lolade.
Lolade.
Don't worry, I'll get familiarized with your voices as we have more classes together. Okay, thank you, Lolade. So Lolade has said that what if it's permitted by law? What is one of the things that are permitted by law? We have NOCLA. NOCLA is non-compliance with laws and regulation. Now, anything that falls under money laundering, human trafficking, terrorism, things that are laws against a federation, if you find your client doing it, is to go and report them straight, because the law has permitted you to disclose such information. You understand? So if you go to your clients and you're saying that your clients is say company money to be funding terrorism, you are supposed to report that client. You're not supposed to be asking them that, oh, can I go and disclose? Directly, you are supposed to go and disclose, because that disclosure is permitted by law. Are you with me? Now, we have disclosures appropriate, like this required for public authorities. You understand? So if that authority is asking you for some certain information, yes, you can disclose. They won't tell you that if police or EFCC comes to you requesting for a client's information, you are supposed to first give them the information before you even tell client that police came, so I now give them your information. You understand? Because if you don't give them that information before you tell your clients, it's more like you are aiding and abetting. You know what aiding and abetting means? That it means that you are part and parcel or what they are coming to catch your clients for. So you first give them the information, not like your clients that they came here and they asked for your information. Because it is required by what? An appropriate public authority. Next up, we have that if there's a professional duty to disclose. If there's a professional duty, and when can there be professional duty to disclose? Number one is you are complying with quality review. What's quality review? So we'll talk about different kind of reviews. We have peer reviews, we have those kind of things. There are sometimes that, you want to review the kind of work that you do for your clients, right? So an organization can take a sample of like 5 clients that they reviewed, and they will exchange it among team members. And say, okay, you guys check how this procedure was done. Check how this procedure was done. Let's see what we can do better. Let's see, you understand? Let's compare the quality of our work across board. So in that kind of case now, is it not the client information that you're going to give out? Yes, it's the client information that you're going to give out. So in that case, there's a professional reason why you are disclosing that information. And then the last one is to respond to an inquiry or investigation by a member body or a regulatory body. If I can come and meet you that we need this information about your clients, you're going to give it to them, because it's a direct inquiry, it's a direct investigation. This is even assisting the point I said about police and EFCC. You're supposed to give out that information. So to simply put it, number one, if your client has permitted you to disclose, you can disclose. Number two, if there's a professional duty to disclose, you can disclose. Number three, if it is needed for a legal proceeding, they need that information as a court evidence, blah, 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 you're supposed to disclose. If it is public authorities that have requested for that information, you are supposed to disclose it. Then, if it is needed for quality review by the member body or by a professional body, you can disclose. There's even this point where they say that if it is needed to protect their auditor, in the best interest of the auditor, he can disclose. Let's say, for example, somebody has gone to take your audited financial statements, they've relied on it, they bought shares of that company, they now suffer the financial loss. Do you get? And they are suing the auditor to court. If the auditor needs to take the whole FS and say, this is what happened, this is what now happened, he has the right to take that particular information to court, because he's needing to defend himself. She gets. So more than the points that they've even put it here, you can divide all these points into 2 and be able to explain yourself in an exam. Okay, we have to protect, to protect the professional interest of the chartered accountant, you understand? To protect your own interest. Not that we will say that you want to protect the interest of your client, you're not going to enter with him. Also, we have to comply with technical standards. So if you need it to comply with the law, normal law, you can disclose. Okay, now we said whether or not you will disclose a particular information. There are some certain justifications as to whether or not you will disclose an information. And this is if, number one, they're looking at whose interest to be affected, whether the interest of all parties could be harmed if you disclose it, whether the information is known as substantial, is the information necessary to be known? Is it necessary information that is supposed to go out? Next, we have whether the situation involves substantial facts, incomplete information, or substantiated conclusions, Just basically, like I said, it's a social science. You have to decide that this information I want to take out, this information I want to now spill, is it necessary in the grand scheme of things? Is it a substantial? Does it no? And what does it mean? What does it mean for us to be substantial? Can it affect somebody's decision if I give out this information? So that's one of the things, a major consideration that we'll put in place when we're deciding whether we want to disclose a certain information or not. Now, this is a core area. This is a core area on this chapter. And that's concept of threats and safeguard. Now, we know that there are code of ethics that's supposed to guide our actions as accountants. Please, this class will be stopping at 12. When you see me, our class will be starting 10:30 and stopping at 12. I have another commitment 12 to 2, and that's the reason why. So just take it as a break, an extra 30 minutes break before you start your next class. I think your next class should be 1. But yes, I just wanted to state that. Okay, now we said that you know what your code of ethics is, Abby. The acronym I gave you, COPY. What's COPY? We have confidentiality, objectivity, professional competence, and due care, right? We have integrity and independence. Now, you know that those are your code of ethics. But it does not mean that every day you wake up, you don't see problems that are affecting that your code of ethics. Everything I've even said now, they feel like an accountant is supposed to be a perfect human being. But as accountants, are we perfect human beings? No. Are our jobs perfect? No. Right? So what is causing our jobs not to be perfect? What is causing the work that we do not to be perfect? It's simply threats. Threat is anything or any circumstance that breach compliance of fundamental principles. Now, we have categories of our threats. The acronym is called SAFI. So you can write it down. Hope somebody is writing down like at home. Hope you are just putting some things down. I believe that an online class is harder than a physical class in your ICANN. It requires more dedication. So please, I hope that, just pick a pen somewhere, just put things down. You cannot forget. Nobody can take what you wrote down from you, but you are always hearing things. We hear a lot of things every day. So please do well. I know you people are adults, you people are balagba, but please do well. You're already paying for the class, so make it count. So the acronym for this threat is SAFI. SSAFI. Okay? SSAFI. Okay. So I will just go over the name. The first S is self-interest threats. The second S is self-review threats. The A is advocacy threats. The F is familiarity threats. And the I is intimidation threats. Are you with me? Do I still have a class?
Yes.
Okay. So you know that the categories of threats are what? SAFI. SSAFI. Now, what are these threats? They are basically, like I said, things that will attempt to breach the compliance with fundamental principles. We have self-interest. Self-interest, let me just tell you, self-interest is when a professional has another interest in the client apart from them just doing their work. That is just what it is. You have another interest in that client apart from the work they have called you to do. The interest can be financial. The interest can be personal. The interest can be, are you with me? But if you are saying that, that kind of thing where you're like, law, I don't want us to, that means that what the work you are going to do as past the work of an accountant, that is self-interest. Now let's read. This is a threat to the auditor's objectivity stemming from financial or other self-interest. This could arise from fear of losing a client. Example of circumstances that may create self-interest threats for chartered accountants in practice include, but they're not limited to, number one, financial interest in a client, or jointly holding financial interest in the client, if you have shares, you're helping them to drag what profit is because you want dividend. That's self-interest. Number two, undue independence on total fee from a client with an undue large proportion, which will normally be 25%, and above, which is an inclusive of repetitive one-off assignments. So they are saying, if you are depending largely on one client to sustain yourself as a business, we are seeing a pattern, and that's a problem. That's self-interest. Because the reason why you want to keep that client is because that client is very important to you. Then we have having close business relationship with the client. All these things even affect your independence normally. You get. So if you have close relationship with a client, they're saying that, already Timo, that's a problem. Concerns with the possibility of losing a client, that client has become your all in all. You would rather let go 3 clients to keep that particular client. Then we have potential employment with a client. You are becoming a member staff that is receiving annual and a monthly salary. We have contingency fees relating to assurance engagement. What's contingency fee? I said 7 talked about the concept of contingency. I talked about the fact that there are liabilities or income that are probable, that are still, the occurrence of it happening is dependent of another event occurring that is not solely under the control of the parties involved. So that's the contingency. And that is not how we run as auditors. You don't say, okay, don't worry, I'll give you 2 million if tax authority did not catch me. That's not how we work. So if you're starting to do contingency arrangements with your clients, we are seeing that there's another interest in what you are doing apart from you just doing your work. We have a loan from clients or on any of its directors because we are seeing financial interest involved. So self-interest, simply put, if you have another thing that you are looking towards from that client, apart from you doing your professional work, there's self-interest. Are you with me? Okay. Now, the second one we have is self-review traits. Self-review, I like things being very simple. I believe that the park is big enough. There's a lot of information. But if I break it down and you can interpret it or say it to a 6 years old, that means you know it. So what's self-review? Self-review means you are reviewing a work that has been previously done by you. The best example of this thing is you are the one that prepared the financial statements for a client. You're not the one auditing it. It cannot work. Will you see any error? Deborah, will you see any error? You're the one that prepared the financial statement. That's why you should go and audit it. Will you see any error in what you've done? No, because it's not me. Or you were just said to even be reviewing. You say the thing is good. Right? So that's self-review. Now, let me just read it. This occurs when any product or judgment from a previous assurance engagement needs to be evaluated in reaching conclusion, or when a member of an assurance team was previously a director in the assurance clients of the assurance clients, or was an employee in the position of to exert direct or significant influence over a subject matter. Now, all this one are plenty in English. What are the 2 major ways? They said number 1, you are working you are working as an auditor that is reviewing a work that you were part of. Let's say, for example, in the previous FY, we audit in areas now. So in 2023, you were in Cadbury. You were a CFO in Cadbury. 2024, you now became an auditor in EY. 2024, EY is now going to audit Cadbury. Are you with me? You're now an auditor from EY going to audit Cadbury. Were you the one that made the decision when you were in Cadbury? Yes. So why should you be auditing that same information that you previously enacted? Do you get? Now, the second one is that I think the second one and the first one, they are almost similar. A member of a national team was previously a director. Yes, I think I explained the second one more. But the first one is simply, they've called you for an assurance engagement before, like they've called you to come and do accounting. You now came, you're not coming to do audits. It's impossible for you to see errors in what you have done. You understand? Now, they've said here that threats are more pronounced in small and medium-sized firms. Threats are more pronounced in small and medium-sized firms. And why? They believe that in small firms, they will have smaller number of staff. So definitely, the tendency for somebody to do a work and be the one reviewing it is higher. Next thing, the reporting on financial information is usually less important. People are not looking at, how many is the transaction. So you don't think that anything can happen. The third reason is that having prepared the original information, used to generate records of the subject matter. So, like I said, one person is the one that is selling. That same person that is selling is the one preparing the accounts every day. You understand? You know, it should be inevitable for that kind of firm not to be having self-review. We also have that a member of the assurance team have been recently or a director of that particular client. So you just left that client office and you're moving back to the client office. Of course, we expect to see traits of self-review. Then we have a member of an assurance team, okay? A member of an assurance team being an exact, direct, or having significant influence in the subject matter. They're just repeating the same thing again and again. Then we say performing a service for a client that directly affects the subject matter of the assurance engagement. Like I said, a major example is you have prepared the FX, you're now going to audit it, it cannot work. Okay, so that is the 2S. Let's move on to advocacy threats. Now, what is advocacy threats? Advocacy threat, this is apparent, this is when, let me explain it literally, is when you are seen advocating for a client more than what you should do as a professional. Now, you know that as a professional, we have a fiduciary responsibility, right? We have a fiduciary responsibility to all our clients, to have them to do everything in their best interests. Everybody with me? We have that responsibility. But now, if you are now saying lifting up a client on your head is a problem. You know that all these big firms, Abi, Coca-Cola, Pepsi, you know, all these big companies, all this oil and gas, they are being audited by the big fours. Abi, are they not audited by the big fours? Hello? Can anybody still hear me?
Yeah, they are.
Yes.
Yeah. Are they
Yes.
not audited by the big fours?
Yes.
Yes.
Yes. Now, let me use a practical example. You see that Access Bank, Fidelity Bank, GT Bank, they are selling shares, right? They are selling shares. Are they not all audited by the big fours? They are, right? But have you seen any of the big four come and do a publication saying that, oh, we're the ones that audit GT, GT is very good, buy from them, you will not regret it. They are good though. Their profit last year was this. Their FS is correct. Have you ever seen, did you see any of them put out that kind of publication? No. Exactly. And it is because, let me read it here. There is an apparent threat to the auditor's objectivity if he becomes an advocate for or against the client in an adversarial proceedings or situation. Whenever the auditor takes a strong provocative stance on the client's behalf, this may appear to be incompatible with special objectivity that audit requires. Examples of circumstances that may create advocacy threats include, but they are not limited to, number one, promoting shares in a quoted entity when the entity is a financial statement audit client. Number two, acting as an advocate on behalf of an assurance client in a litigation or in a dispute. Number three, acting as a reporting accountant in an entity when that entity is a financial statement audit client. So, you know, I didn't even see this, but that's a very, very good example. No big four can come and say, buy from Fidelity, voila, you cannot regret it. Access Bank, best thing. You should come and buy. You know, the moment they do that, we can clearly see that there is something, either, you know, there's self-review, there's self-interest there. And we're also seeing that there's advocacy threats, because what concerns you? Who are you to advise the general public to come out and tell us that we should come and buy shares from your clients? You know, that's a wrong indicator. Okay, so we have familiarity or trust traits. Now, what is familiarity traits? Familiarity traits basically comes from a trust, you know. Okay. It basically comes from, like, the best way to put it is see finish. You understand? Like I said, you cannot be going to your client's office every year for 5 years and still be telling us that, I don't know them, our relationship is just very far off. Who are you deceiving? You understand? So what's familiarity threat? A threat where the auditor, by the virtue of close relationship with an assurance client or directors or officers, becomes too sympathetic with the client. Example or circumstances that may lead to familiarity is, number one, you have a member of the engagement team has a close family relationship with the directors or an officer in that client's company. Number two, a member of the engagement team having a close or immediate family relationship with a client who has direct or significant influence on the subject matter. Number three, a former partner of the firm being a director of the client. You are a partner in EY, has now moved into the industry. He is now the CFO on that engagement. That's a problem, and it's still EY that is coming to audit them. No matter, even if he has left, it does not mean that when he left EY, he fought with everybody there. So that can be a problem. We have accepting gifts or preferential treatment. Accepting gifts or preferential treatment unless the value is clearly insignificant, and the reasonable man's judgment will be the yardstick. Okay, they've added this here that it is the reasonable man's judgment. You understand? Because some of us are not reasonable. Like me now, a Dior bag, a Chanel bag is actually reasonable to me, but I'm not the average reasonable man. Are you the average reasonable man? That's a good question to ask yourself. Okay, then we have long association with senior personnel. You know how these people will say 90-48 Latin check back more. So do you think that those ones will now see themselves and then they will not be able to build a cogent relationship among themselves that will be threatening somebody acting as a professional? That cannot work. Then the last one we have is intimidation threats. Now, intimidation threats occurs when a member of an assurance team, okay, intimidation is basically oppression. That's it. For you to be intimidated by somebody or something, that thing must be higher than you. Familiarity is still finished. But intimidation is somebody from above that you respect and you regard, telling you to do something, and you having no other choice but to do it. Now, intimidation threats, it occurs when a member of an assurance team may be deterred from acting objectively or exercising professional skepticism by threats, actual or perceived. So the threats can either be actual or perceived from directors, officers, or employees of an assurance client. So all this plenty English should say that. Imagine that you are just an accountant, Abi, that was recruited into a firm, and the CFO is telling you that so I just got off a meeting with Oga now. Oga is saying that shareholders are saying that what they want is 25% profits. And that's a 5% increase from what we had last year. And I told him that how can I be the one to state what the profit is? The profit will be whatever, you understand now? The profit will be whatever it is based on my review. You understand now? And Oga is saying that that's not what he said, though. He's saying that this is what shareholders want. You are automatically intimidated because that person is supposed to be your boss, and your boss is the one that's telling you that this is what clients want. So what are the examples of you being intimidated? Number one, you are being threatened with dismissal or replacement when you do not do whatever they want you to do. Number two, you are being threatened with litigation, court case. If you don't do this, we are going to take it to court. Next up, you are being pressured into reducing inappropriately the extent to be work to be performed because you want to reduce the audit fee. That one is even for professional clients. So they're telling you that they're saying that we'll need 3 months to work on this, and they're telling you that don't mind 3 months. This is what happens technically for all these professional services and our government. When they say that they should construct road or things like that, because our government saying that no, you don't do the best quality of the road. Share whatever you chose is right. And that's an instruction that's coming from our governments themselves. So they are being forcefully told to reduce the quality of their work because governments want to pay less money on that project. Okay. So now they said the list above is not exhaustive. Consequently, members should take cognizance of other situations that may pose threats. There's no, like I said, the fact that what we do as accountants is not one of automatically means that we're going to see different problems. All of us, we hold different positions in our office, and every day there's always a new problem, right? That's the way our work as accountants is. Every day there's a new problem. So that means that as an accountant, you must be able to look for practical ways. We're able to look for practical ways to come to or to manage all these situations that we have, that we experience in the course of discharging our duties. Okay. Now, as a body, because of these threats, there are some things that have been issued to us to help us manage all these things when they arise. And what have been issued to us? Safeguards. These safeguards, they are intended to be used to eliminate or greatly reduce the threats that we experience as accountants. So safeguards are put in place to help us to effectively reduce the threats that we face as accountants in the discharge of our duties. So safeguards are being divided, they fall into two. We have safeguards by the profession, and we have safeguards by the work environment. So let's say Deloitte, PwC, they have their own safeguards to make sure that their staffs are doing what they should do. Are you with me? So that's what we're trying to say. But what are the safeguards now that has been put in place by the profession? That's by ICANN itself. What are the safeguards that have been put in place by ICANN itself? So ICANN has put in place educational training. That's why to be a chartered accountant, to pass all your how many papers, 13, how many papers you're supposed to go through, is a compulsory requirement. Number two, continuing professional development. ICANN also has like all these one-off courses, right? You see them that they say they are doing course on maybe weeks on fraud or things like that. So that's continuing professional development. We also have professional standards and monitoring disciplinary processes. Yes, ICANN used to seize people's license, you know. I think last year, was it not Mr. Innocent? He seized some people, like one guy that was working in a member bank, you know, just some people that are supposed to be professional accountants that refuse to act as professionals, they take away their license. Then we have external review of a firm's quality control. So ICANN can send somebody to your organization to say, let's see the quality of work that you're delivering, the fact that you're using our license. We have legislation governing independence. So under CAMA. So under CAMA, this is our copy. Is not only as a general law, it's also under CAMA that if you act as a professional, there are some things that you're supposed to have. Do you get me? So, and those things are also essential. Okay. Now, what are the safeguards that are issued by the work environment? That means where you work exactly. What can they do to ensure that? What can they do to ensure that the interest of? What can they do to ensure that the interest of their accountant or their chartered accountant is up to date? We have number one, when the assurance client management appoints a firm, persons other than manage. So what can they do? You know, they are saying that when they appoint somebody, to review like the work that they do apart from just the management. Next up, we have the assurance clients has competent employees to take managerial decision. Okay, we have policies and procedures that emphasizes the assurance clients' commitment to fair reporting. So if you go into a bank, you see that they will put that statement of policy. You know, those things are what the work environment is putting in place. Okay. Then we have internal procedures that ensures that objective choice is commissioning in that ensures objective choice in commissioning non-assurance engagements. So this means that we're trying to say when you want to take up an engagement, there's a review that is being done that is not political, that okay, should we accept these clients or should we not accept these clients? And it is not about the client at all, but more about who you people are as an organization. Okay. Then we have a corporate governance structure. Corporate governance is very important. In your CSME, you would have done corporate governance. So corporate governance structure that has an audit committee, peer review, such that everybody has their own function and people know that this is what I'm supposed to do. You understand? So safeguards can also be different things. They can have like all these rules that we have for chartered accountants, our normal ethics and our disciplinary tribunal, there are also different kind of safeguards that have been put in place. Now, the last thing we'll talk about today, I'll just talk about this briefly. But that will be your assignment. You're supposed to read how we ethically resolve conflicts when they happen in accounting or as professional service people. How do we resolve conflicts when they happen? Now, like I said, conflict is inevitable, and it is because in our profession, it is two human beings that are dealing with each other. And this part is how they ask their questions in professional level. Now, we said in evaluating compliance with fundamental principle, a chartered accountant may be required to resolve conflicts in an application of fundamental principle. When initiating either a formal or informal conflict resolution process, there are some things that a chartered accountant should do, and there are 5. And these 5 things are how you solve every problem as chartered accountants. Now, what do you do? Number 1, you're supposed to know what the relevant facts are. Let's say, for example, your client is doing money laundering, right? What are the relevant facts? Can we see that this client is intentionally funding terrorism? This client is intentionally funding crime. This is not a new thing that's been happening. Number 2, what are the ethical issues involved? You have to look at yourself that which of the code of ethics are we breaking? Are you with me? What are the ethical issues that are involved here, right? The 3rd one, what fundamental principles are related to the matters in question? What fundamental principle? Are we saying that there is a familiarity threat here, there is a self-review threat here, there is a intimidation threat here? Then number 4, what are the established internal procedures that we use to solve this problem when it occurs? What are the established internal procedures that we use to solve this problem when it occurs? Then, if these internal procedures will not work, what are the alternative procedures that we are taking to solve this problem? Okay? So, having considered the issue, a chartered accountant should determine the appropriate action that they want to take. Like I said, it is not a one-size-fits-all. So I will send you guys an analysis of past questions. I'll basically write out all the times that this chapter has been asked, right? And they're going to look at them and how they answered the question. Are you with me? So I'm basically going to look at them and how they answered the question. Okay. So just like I said, I have a 12 p.m. commitment. So we need to do a
recording in progress. Recording stopped.
So we need to do a hard stop now. Thank you very much for your time.
Yeah,
I will
please.
send
Yeah.
last question immediately
Yeah,
after.
thank you. What you said about that, is it the questions and the solutions? That will be really, really helpful because it's one thing to learn. Then the next thing is how to apply because there are times when they can mix scenarios. So that question for us to try our hands on will really, really be helpful. So if you can send it as fast as possible based on your convenience anyway.
Okay, I'm not going to
next lecture next Saturday.
Yes, I'm going to forward something to the group now. I think somebody was kind enough to. Okay, you get it. I'll forward something to the group now. Thank you for your time. That will be all.
Thank you.
Have a good week. All the best.